Hey guys, how you doing?
Pretty good. I thought you were gonna go live on YouTube or something.
No. This is just for us.
Okay, sounds good.
Just get through kind of the application of the foundations program. So weekly time frames and bring it down to daily. And while we got live markets, and we kind of look at the live markets and go through what do we look at and what do we expect based on macro pictures and sectors and so on. Awesome to have you here, Mike. All right. So I'm pretty sure you guys can see the S&P 500 right now, which is over here on the right. That's the screen I'm trying to share anyway.
That's the yeah.
Yeah, perfect. Okay, so
I see S&P and then the 6 tech stocks on the left.
Yeah, and all the big tech stocks, perfect. Yeah, so that's the supply zone the S&P's got to get through. If we can get through that supply, then we can fill the gap. Right, we'll run all the way up to the next supply zone, which is up the top here, which would be a great run. So that's the supply zone we're working through. We just got through this heavy resistance here, which is a 3803 area. So that's coming all the way back over here. That's a resistance there, support. Okay, resistance. So we just finally broke through that. Now we're getting up into the supply area. So it's gonna be a little difficult to get through that supply. It's a good solid supply zone. A big strong move away, broke below the previous low. Okay, so we have the explosive move away, more than 2 to 1, right? And that's what started the downtrend here to break even this low here. So that's a very powerful supply area. With the big techs, it's where the real money's coming into the markets right now. That gives us the probability that we can base, take out the sellers here and break through. Okay. And the next thing is when you look at this on a larger time frame. So we come out to the daily chart here. We've had a couple days of retracement here. This should be the first push up, and then we should get a follow through for the rest of the week. All right, so we just broke above yesterday's high. Okay, so we should be able to push through it right through here, and then we should be able to get to new highs throughout the remainder of the week. So coming into this week was kind of the expectation was Monday to be down, the rest of the week to be up. So slight move up yesterday. Okay, stronger move up today, and it's just the waiting and patience game. Right? So it's looking at where the market is, understanding what should happen, and then trading to that perspective. And then you've been kind of see the constant post coming through today is what areas is the market respecting, and that's really going to keep you on the right side of the market. When you look at like Monday and everything's red in front of you, so if you look at the indexes and they're all red, immediately like, oh my gosh, this is the pullback, the market's going to drop, and instantaneously you want to start shorting the market. You've got to wait until sellers take control. You've got to wait until demand zones are being broken and supply zones are being respected before you position your portfolio account or any transactions that way. Right? So coming in with the right perspective, right expectation is critical because it comes back to psychology. It puts you in the right mindset. Right mindset. When you look at transactions and positions, so one of the trades that I posted this morning was Laser, LAZR, and having the right expectation. So let me just jump over to that screen for you. Right, having the right expectation. So this is a 60-minute time frame. We know the supply here. This is a solidly proven supply area because we just touched and dropped. Right, so the expectation is we're going to reverse here. Right, I'm not worried if it does. That's what should happen. There's sellers there, and it's proven. It's guaranteed there are sellers sitting here. It does not mean it's going to completely reverse the stock and drop it. We've just created a beautiful little demand zone right here. So even if this does reverse back to just above our entry point, that's absolutely okay. It's not likely to, but it's absolutely okay because our stop loss should be below, and we just leave our stops in play to let the stop loss make the decision from this point forward. There is massive volume coming through on this breakout right now, massive volume. And so this is exactly what we want to see. once we get where we are right now to a little higher, expect the sells to start hitting this and pushing this down. So if we can get a nice base here, that can take the sellers out, and then we can look to follow through and the breakout on this. So this is another stock here, similar to GRWG and Plug, etc. I mean, look at this. The volumes just started coming in November. Okay, so this is just it's a newly accumulated stock by institutions. This is another one of these companies that could be $60, $70, $80 in a couple of weeks, if maybe even less. Okay, so this is when we're going through, I think it was session 11 or 12 in foundations. We're talking about what I refer to as the generational technology companies. This is one of them, right? And you got to have a little bit of patience with these stocks. Okay, you got to wait for the institutions to come in on it. There was no email because my emails keep going to junk. I finally got Google to rectify that yesterday. I just tested it, so it's good to go now. I did post it in the general room. I did post it in the foundations room, so people should hopefully have notifications on to receive that. I also did text a few people, direct message a few people directly on it. I know Anthony has the only day and hour of the entire week. He's got another obligation, so he did message me back. But we're going to be doing this ongoing, and kind of when you do the first sessions is a little bit typical. Right? And a few people show up, and that's okay. We all got busy lives during the the middle of the day and so forth, and all good. Session is going to be recorded, and I will post that recording. So I'm going to create another area, to kind of go through this aspect of it. And yeah, this is extremely valuable. I 100% agree. And the theory of the foundation course is amazing. The application we did there is amazing, but we've got to do a lot more application for this to really come together to get the full true understanding of it. And like I said many times in the actual foundations course, is every chart is different. Right? Every time you look at the same stock in a different time frame, the chart is different. So it's taking that overall foundational principle of finding demand zones and scoring up demand zones, and then support resistance areas and moving averages, et cetera, and then bringing and tying that all in together. And it's just that continuation of repetition of the application that will get you and develop the skill set. And like always, not all trades we take are profitable. So GRWG was a losing transaction I posted this morning. It probably, I'm in a longer term play on that. So yeah, 48.25. So it's back above the demand zone I posted. Okay, so all it did is came down to the prior resistance, new support, and balance. It didn't hold the demand zone in this area right here that I posted this morning. So that was a losing transaction. Okay, and again, newer company, there's now a heavy volume on the stock, but you can see back here on the weekly time frame, big solid strong move. This is a stock that we were posting in the room. It was $18. Back in November. Okay, I took a position back here. I didn't stay in it. Would have been nice, but this is when it started coming in on the scans and so forth that I was talking about in session 12. How do you find the trades? So this is the process of foundations all coming together here. All right, let's go through. Are there any particular companies or stocks or charts or anything you guys want to look at that I can go through and yeah, that's a multiple time frame for the same symbol. Right? That is GRWG. Okay, GRWG there. Okay. Any stocks or companies or whatever you want to look at to get through this process and do some application on. We're definitely going to do it on the S&P 500. Right? Very, very important. Okay. Take a look at BA. Absolutely. Definitely. Okay. So BA is a company, can be extremely explosive right now. The future of Boeing is huge. Future of Boeing is huge, and there's a massive amount of upside potential on Boeing. The short term is the hit with a lot of legal suits and fines, et cetera. And even with all those legal suits and fines and settlements, et cetera, the stock isn't breaking down to demand zone, which means someone's sitting here accumulating the selling. So that is a very, very powerful indication. So coming back, daily time frame. Let me just blow this up for you. This is the demand zone that we're looking at here on the daily time frame. Right, so we dropped in at once, we pushed back up, filled the gap, respect the supply right here, back into the demand zone, came deeper in. Okay, this is normal, and we're pushing out. Now, when we break this down from the daily time frame into, we can even look at the 4-hour time frame right here. You can see the series of tails in here. So zoom in a little bit. My screen's huge, so I'm not sure how this is showing up on you guys, but you can see the series of tails here where we just keep coming back to the entry line of the demand zone here. So again, we're proven. Right? It's absolutely guaranteed there are buyers sitting here, someone's sitting here accumulating, buying on Boeing. Right now, you can see down through here, pivot high, pivot low, pivot high. Okay, we break down to a lower low, lower high, right? Still a lower low. So we're still in a defined downtrend, but we just have a very, very solid demand zone right here. So we're buying off the demand zone in the anticipation that if we break this pivot high, which we're very, very close to doing, right, then we'll have a higher high with a higher low if we can close above these candles high. Right, so we'll be into the trade early. Right? Now you can also take the trade if we're not in the trade yet. Right? This would be taking the trade on confirmation. If we break above that 209 area, this is where you can get into the transaction on confirmation. Okay, so that's a powerful entry right there. Now, you know, filling the gap here, the gap's already filled by this, so that's already taken care of. So if we can get that breakout, then we can at least get to the minimum of here of 213.50, and then we should get the continuation of the new established uptrend and move in the upward direction. So Boeing, okay, my trading style right now is non-aggressive. And what I mean by that is I'm not trading with targets. I'm purely trading with stop losses, no targets, just because there's $3 trillion coming into the markets, and it's going to be very difficult for the markets to drop. Right now, if you look at beyond this week, okay, looking at this week to kind of at the end of this week, really push to the upward direction. As long as today can hold, right? We need to hold and close above yesterday's high. Then looking for the markets to really make a push in the upward direction. Coming into next week, things can change. Right? There's a lot of fear in the market due to, you know, Trump being pushed out of the government, et cetera, and that would create a lot of riots and turmoil, which is only, at the end of the day, it's only a good thing. The you know, turmoil and, you know, fear. But at the end of the day, you know, what drives the market is short term is news. Long term, right, is buyers and sellers, demand and supply. The longer term view is $3 trillion coming to the market. Markets have to go up. Right? It's very difficult for them not to go up when you know, $3 trillion. I mean, that's the valuation of half an institution coming to the markets. So that's why the market keeps rising. So there's a lot of questions out there. Why does the market keep going up? They're printing money. That's buyers. That's demand coming to the market. It kind of has to. It doesn't really have a choice not to. The thing to look out for is the bond market, rising interest rates. And this is in 2021, we've got the largest amount of maturities coming to the bonds. So money's going to have to be printed. And when a bond matures, let me cover that real quick. When a bond matures, let's go back to a bond is, if I buy a Canadian government issued bond, I'm lending the Canadian government money. They pay me an interest rate yield. Okay. So if I'm lending them, say I invest 100 grand in Canadian bonds, I'm lending them $100,000 for, if I buy a 5-year bond for 5 years. At the end of the 5 years, they're going to pay me the 100 grand back. Right. So when a bond matures, they have to pay that money back. So in 2021 in the US, they got the largest amount of bonds maturing in history. So the bonds, the US government has to pay that money back to the investor. So that money is going to come from somewhere, and right now they don't have it. They don't have the money they borrowed. Right? I mean, you can look at the deficit. So that is a concern, and that's a risk in this marketplace at this point in time. Longer term, what are they proven to do right now? Print. So what's the expectation? They'll print more, right, to support the bond market. Bond market is extremely important because it controls the interest rate market, which controls the real estate market and the cost of business, basically. most businesses operate. Look at Tesla. Tesla operates from borrowing money. Right? If Tesla couldn't borrow money, Tesla wouldn't be Tesla, wouldn't be a company. They'd be bankrupt. You look at 2020, why the market runs so hard, SPAC market, and that is borrowed money coming into companies that don't have any sort of valuation. A lot of these companies don't even have revenue yet. Their projected revenue is huge based on technology, et cetera, but they don't have revenue to pay this bill. But they're blank checks, and companies are writing them blank checks saying, hey, whatever you need to build this company, we're right behind you, right? And we'll take you public to raise capital, and off they go. Okay, so that's kind of the longer term view. Okay, Boeing, what do we got? Boeing, very strong demand zone, break above this high right here that we just came into. Okay, and you can see this here. This is a 15-minute time frame. We just hit that. That is a little supplier. It's more a support resistance area. You can see all the way back over here. Resistance, resistance, support, resistance, resistance. Break above that. And whoever is short on this, and there's going to be quite a few short sells on this because of the news, etc., we'll get what we call a short squeeze. Short squeeze is everyone that's short has to buy back their shares to close their position, and then you'll see this thing pop and rocket. Okay, so this is a transaction. If we're not currently in, we can take the entry above the 209 area, looking for the short squeeze, and you'll see this should get quite a nice pop on that. Okay, right up into this area in here, which is a previous supply area in the larger time frames. Okay. So there's a kind of quick overview of Boeing. All right, let's go over to Neo and Lee. All right, now, again, these companies here, small size companies, they are trading on projected revenue. Okay, they're not trading on current revenue and current profits. A lot of these, EV companies are doing, 7,000, 10,000 cars a quarter right now. Sorry, 7,000 to 10,000 cars a month right now, when a company like Tesla is doing 100,000. So they're very, very new to the market and very new companies. So there's going to be, when trading these companies here, you've got to give them room to breathe. Okay, they got to give them room. Now, what's driving Neo is news. Okay, they just released their new batteries that are interchangeable, which is different to all the other electric vehicle makers. The cars that came out with a 75 watt can now go up to the 100K watt, and it won't be too long. I'm going to be delivering 125K, 150K, because they're developing the technology very quickly. So that's what created the gap right here yesterday. Okay, that's what created that gap there yesterday. So you can see over here, weekly time frame, obviously very strong uptrend, very high in price right now, can go a lot higher. On the daily time frame, we're up, and we have a base. I'm not too sure what my daily chart is like that. But anyway, on the 4-hour time frame, just kind of breaks it down. Okay, we had a gap up this morning. Okay, there's our base, our drop. So this is a newly formed supply, not a very solid or strong supply. Although you can see it is being proven right here. We break that low, we can then fill the gap. On the gap fill would not be would be a nice area to consider entering into a transaction on this, which is coming down to this area here. So you're on the 6-minute time frame, bottom left corner. This would be your demand level. Okay, it is a proven. It's gone in there deep and then exploded. Right, so this area here would be an area of demand at 57 and 58 bucks. Right, we just stopped down below this area of 55.85, so below that. Okay, so Neo, when you look at it from a pricing standpoint at this point, all-time high was just put in yesterday, 2 days ago, Monday. All-time high was put in Monday. So a retracement on this would make sense. Would make sense. Lee's probably going to be a very similar picture. LI. Okay. We came down. We got the gap fill this morning. Okay. So right into the gap fill. Up we go. Came into the previous area of selling right here on the 4-hour time frame. Now we got a retracement. So here's a kind of a little bit advanced for where the guys are just coming out of the foundations class, but this is the type of thing you need to become experienced with. So you get the wick coming right in here and the tail just below it. So this is what we call a wick tail overlap. On a smaller time frame, you're going to find a demand zone. So on the 6-minute time frame, you're not really going to see it. You're still going to see the wick tail overlap on the 6-minute time frame. But when we come over here to the 15-minute chart, bottom right corner, this is where this demand zone is coming into play. And this is what the overlap of the wick to tail is generating. So there is a demand zone right in here. And we're currently in that demand. We've already touched it once, moved up a little, coming back in. Okay, and you'll see this happen quite a bit. Okay, we're going to come back, retest. We're now starting to move out of that demand zone on Lee. And so Lee's looking in much better shape than Neo is. Okay, so this is a potential trade here. This is actually a demand level on top of a demand level here on a smaller time frame on a 5-minute chart, which you're getting too small a time frame at that point in time, but it does have that demand on demand. So this is a area of demand without trading above the previous high here on the 4-hour time frame. That indicates a little bit of weakness. Okay, we should have got above that for the buyers to take out of the sellers, and this would be a much higher probability transaction. Much higher probability transaction. Let me just shut my phone off. Right. Much higher probability transaction. Okay, so still decent. You traded right to the high. Would have liked to have seen it just a little bit higher. Would have been better, but decent transaction. My pick of the EVs right now is XPEV, and the reason being is I just got an extra, I think, 2.7 billion in funding. Right, so with the money coming behind them, that gives them the availability to be able to grow, and if they can grow, then obviously revenues can increase, the production can increase, the manufacturing aspect of the company can increase. And when you think about it from an institutional standpoint, that's what they're looking for, right? So this is how they, any investor, if a company can, in this case, you increase manufacturing, that means they can increase revenue. And if they can increase revenue, then they can make more money, develop more cars, sell more cars, get more cars to market. The risk is decreasing, right? Long term, risk is decreasing long term. You got to think of an institution, they're longer term investors more so than shorter term investors. So what we can do is we can do short term transactions on their accumulation, the buying of their long term investments. Right now, why are they longer term? Because of their size. This is a 15-minute chart, and there's 4 million shares traded. It's only a $51 stock. So for an institution, that's absolutely nothing. It's like you and I kind of working past a penny to them. It's such a small investment. It's insane. Okay, so this would be my preference, and this is why I posted this one this morning in relation to looking at any of the others. On the daily time frame, demand zone was here. Right? We held the demand. We came back up, and we got the breakout. Okay, we got the breakout yesterday. So that's extremely powerful. We got the breakout. Okay, now he's getting a retracement. Okay, which we should be getting in this area right here because of the selling. So getting that retracement, and this is one of the principles is when you come off that big candle right there, and we retrace 50% of the value, that's another probability factor, another odds enhancer coming into play. So when you can find a demand zone at the 50% retracement, so the halfway mark between where it exploded from to where it stopped going up, this is a very common mathematical application for everyone to come in and take a look at this stock. Okay, so we've got the demand zone there. We're looking at 50% retracement of a very bullish strong candle day yesterday, and we've got proven demand here. Okay, again, just a 45 minutes or so ago. So this is good potential. So again, you've got to be patient. You got to be patient. And so to kind of show you what I mean by patience, what does that mean? When we come back, we look at LAZR. This is a great example right now. LAZR very, very similar chart. Look at the daily chart here of LAZR, okay? Tight range downtrend. Okay, there's your pivot high, pivot low, pivot high, pivot low, okay, pivot high. Tight range downtrend. Come back and look at XPEV on the daily time frame. You see a very similar chart, right? Tight range downtrend. Okay, lower highs, lower lows, and then we get the breakout. So on LAZR, okay, we're just starting to get that breakout now, and it could be denied. Right? We're just starting to get that breakout now. Okay, so, and it's coming right into the area where we said the supply is sitting and expect to retrace off. It's doing exactly what we think it should do. There's demand right here, but you got to be patient. You can see this small baby little candles in the 15-minute time frame, not doing much. When we turn, like sideways, 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 gap up in the morning, right back down, fill the gap, okay? And this is the trade we posted this morning. Take the trade on the gap fill, and then it just sat here and until something happened. Right? So most likely there is a news event. Hey Gus, news event of some nature, obviously to bring in this type of volume. Either that or an institution started to step in, and other institutions are going to have scanners on volume and definitely on movement. And when one institution starts to buy, the other institutions that want to get into the position are forced to buy. And this is the situations that you and I want to take advantage of. Right? When you think of the average retailer trader, the institution is taking advantage of the average retailer trader. Right? And they take advantage of them through emotion more often than not. What we're doing with the skill set I'm teaching you guys is to reverse that. We're going to take advantage of the institution. Here's the crazy thing. Let me see if you guys can answer this. What is the greatest weakness of the institution? It's probably the complete opposite of what you think it is. What is the greatest weakness of the institution? Type it in, or throw your mics on. Okay. Yeah, too much money. They're too big. When you think of the retail and trader, their thought process is completely the opposite. Yeah, can't buy enough. Beautiful. Right, the retail trader thinks the institution has the advantage because they have so much money, right? Because they can force a stock to change direction, or they can force the S&P 500 futures market to change direction if they wanted to. They've got that much money, they can drive it all by themselves in one institution. That's actually a disadvantage. And what the disadvantage is you can only ever buy as much of what's available to sell. It comes back down to the demand and supply. And so if the sellers aren't there, they can't buy it without forcing the stock price up. Now, if they need to get 500,000 shares, or even in the case of, we looked at this in foundations, we looked at Apple. Vanguard's got 1.28 billion shares. 1.28 billion shares is how many shares Vanguard owns of Apple. Now, Apple split, what was it, 7-1, right? So their holdings went up 7 times. But now they've got to sell that at some point, not anytime soon, I wouldn't assume. Apple's a great company, it's got a great future. But, how long is it going to take them to sell that many shares? Also, as they sell that position, they're going to drop the stock price of Apple pretty heavily if they try and sell it quickly, which means they try and sell that quickly, they're going to lose their own profit. You're going to drive the stock to go down and lose their own profit. So they don't want to do it quickly. So when do they want to do it? They want to do it on good news, because that's when all the buyers come into the market. They're going to sell when the buyer is available to sell to. That's when they'll sell it. Right? When do they want to buy? On bad news. That's when the sell orders are in the market and they can buy, and they can buy a lot of it and not move the price much. So the way the retail trader thinks the market really works is actually the opposite. And so we've got to think of this and say, well, how does the institution operate? And then take advantage of the institution is everything we're looking to do. So this here was probably news. It may not have been. It could have just been the institution just finally started hitting the buy order, which forced all the other institutions to start buying as well. And now, what are we doing? We just hit where the institution sell orders are. So what's the stock price doing? Exactly what it should be doing. Where should it drop to? There's a small area of demand right here. Small area of demand right here. So we got a pretty good chance, right around 33.40, of it reversing and then coming back to attack this 35.50 area. Pretty good chance. Okay, so Having the right expectation, and this is what I was telling you guys in foundations, is once you get to the stage where you can go in, plan out a trade, then do what I refer to as projection lines. Okay? Mark in, okay, the stock will go up to 35 bucks, retrace back down to wherever the demand level is. If you were back in here, we didn't have this action in here yet, you'd be coming back and looking at the prior resistance here, and this being a demand level, and we're tracing all the way back down to 32.50. That's your expectation. Right? And then looking for it to move the upper direction. And then what do we go? Okay, then we're gonna get up, fill this gap. It's already filled, so we can get a little higher than this. And then we're looking for about 38 bucks. And then expect the same thing. Expect a retracement. So having that expectation is how we can control emotions. Okay, very, very important. You'll see coming in the chat, I know Jordan did it today with AMAT, it's coming down, thinking about selling. Well, you can look at the chart and say, well, where's demand? Is it breaking demand? Who's in control? Buyers are still in control. The thought process of selling shouldn't even be there. Your stop loss should just be there controlling that action, right? So these are the things that are easier said than done, right? Easier said than done. Okay. So that gives you kind of a little explanation here on this type of stock. These are, you can see laser here. Again, November was when the institution started to come into this. So very young company, higher than expected volume at this point so far, and it's only going to increase and we should be able to close. I want to be able to see it close, above 36 would be great today. Right? And then we know the buyer's in absolute control. If it closes above 36, then we can expect a gap up tomorrow. Okay, so little things like this, and this is just experience coming into play. Okay, all right. Let's start with the SPY, and there's many different ways we can look at the S&P 500. My preference is utilizing the S&P 500 futures market because it's a professionally traded market. Very few retailers are in there, and whatever retailers are in the futures market are not very impactful, right, because of the size of leverage, etc. Okay, so we'll look at the SPY here because everyone's going to have access to the charts. Understanding what the S&P 500 is extremely important. In today's market, what's even more important is understanding what the NASDAQ is. And the reason being is big tech is the driver of the markets, okay, today. So but S&P 500 is always going to be important. It is what we call the benchmark, right? So it's the center point that everything else revolves around. The reason being S&P 500 is 500 largest capital companies in the markets. So there's more money in the S&P 500 than anywhere else, okay? All right, so starting on the weekly time frame, we traded up, we based up, right? So there is a rally, base, rally, and we came down here last week, retested, and now we're looking to continue that rally in the upward direction. Right? Now, longer term, we had the retracement, okay? We came up, small retracement, came up, and then right through here, we based. Hey, there's a base there. So when you go back and you think of in foundations, I taught you the 4 stages of a trend. So sideways, number 1, uptrend, number 2, sideways, number 3, downtrend, number 4. When we do this, we rally base. This is the resting point to generally establish the next phase of an uptrend. So this is the breakout that we were looking for to start the continuation of the next phase of the longer term uptrend. So based on what the markets are telling us at this point is we should get a longer term up move in the markets here. And when going back to looking at what I call kind of future generational companies, that gives them the opportunity to have massive returns as long as those companies do somewhat of the right thing. Okay. And that's why, when you look at some of the stocks that, I'm posting at this point, no targets, only stops. I don't want to limit the upside potential of those because they have a huge amount of room to run. Right? And I don't know how much that's going to be. No idea. So just manage from underneath, and until the trend fails, stay in the transaction. Okay, so I'm not taking profits, and this is why as we've just broken out into this next phase of uptrend. Working on the next phase of uptrend, $3 trillion being printed, and Never in the history of the markets have we seen so many blank checks behind companies, right, on these smaller companies. So that's kind of the three foundational principles behind why I'm trading the way I'm currently trading. Right. So we are currently above the upper trend line. So you'll see over here on the 4-hour time frame as well as the daily time frame, broke above the upper trend line. So what was once a resistance, okay, so it couldn't go, it's hitting its head on the ceiling, couldn't go higher, okay, is now becoming a new level of support. So here we've got a high base, and now what we're looking for is that breakout. And that could be a nice strong wave, nice strong potential move to the upper direction. Okay. And then we'll be looking for the retracement off that. Okay, so this is what I'm looking for this week is, you know, today following through and getting that breakout move of the markets going to new all-time highs and all that sort of thing. And you know, getting those headlines coming to the markets of positivity in the markets. Okay, so this is the thought process and the reasoning why. Okay, so we don't have the breakout yet, not proven to be right yet. You can see in the 4-hour time frame, drop, base, and we're breaking out to rally right now above, okay, that 380 mark. Okay, breaking above that 380 mark. Now, to go higher, coming back to what I showed you guys earlier, is the Nasdaq's got to get through that supply level. It hasn't achieved that. Nasdaq gets through that supply, you'll see big tech pop, and big tech will then drive this to new highs. Okay. Apple is doing phenomenal. Apple and Amazon are on fire today, on fire. Okay. So for a very strong company, might skip phase 4, just 1, 2, 3. Yeah, so 1, 3, and then go back into 2. Okay, so 1, 2, 3, and then boom, back up into 3 again. So in upward trending markets, that's common. Okay, that's common. So here we took, you know, you think of this on the weekly time frame, that's August all the way through to November. August and November, we were in a sideways market, right? And in a sideways market like that, this is where we're aggressive on taking profits, right? I'll trading with targets. So coming back to what I taught you in foundations, you know, target 1 could be a 2 to 1. So you can set your mathematical targets, and then looking at previous pivot lows for target 2, and then 3 would be a runner with a trailing stop or a smaller time frame technical stop. Right, so I'm using a 15-minute chart for the small time frame technical stop. Okay, with the starting of a trend, right, starting of that next up move, well, we've got a greater potential, and we don't know this to be true until it happens. We've got a greater potential of a much larger up move and a massive profit potential opportunity. So I'm going to be very relaxed on taking profits and just manage underneath. Okay, and the less time you spend looking at your positions, the greater success you'll have. And it's just come in with the 6-minute time frame on them and move the stops according to the rules. Okay. What trend would you be looking at for those companies to place your stop weekly or daily? Okay, so stop losses are still placed on 60-minute time frames. Okay, so your trend should maintain on a 60-minute chart if the stock is if the buyer's gonna keep coming in. Because what we're looking at on those particular companies is we're taking advantage of the institution accumulation and institutions fighting each other trying to buy before them. So when you look at my great starts to the year is this stock here. Okay, so January 5th, and I kind of apologize to you guys because all I said was, you know, plug long, and that's all I posted in the trading room. And it was coming right at this little tiny baby demand area here. Okay, that's a rally base, and the gap up is a rally. And just came into that demand area there. And next day we gapped up and did basically nothing, and then this thing just exploded. Okay, there was a gap fill trade today, but with this so high in price, you know, I'm not posting that trade. But my expectation, the stock will hit probably at least 85, at least 85. But we'll see. You know, that's you know, who knows if that's going to happen. That's projected price on this is $85. So it's got some room to go yet. But same sort of principle here is, you know, if the trend's going to hold, it won't break below a 60-minute pivot low. So let's kind of test that. January 5th was the entry right down in here, coming off that little 60-minute demand zone right there. Okay, that's your entry point. Now we get the breakout. Okay, so you can move your stop loss under this low here. You come down here, up we go to new highs, break above the previous pivot high right here. New high, move the stop loss to here. Okay, retrace, break above the previous high right here. Permission to move the stop up. Okay, we come down to here, break above the new high here. Okay, previous high here, break above, stop loss to here. Okay, retrace, break above the high, stop loss to here. Right, so you've got a high, a rally base rally here, but until that moves at least 2 to 1, right, the stop loss is going to remain down here. So my stop loss is currently down here around $60. So there's $12 of profit that I could give back, and I'm okay with that. There's demand here, there's demand here, and there's demand zone here. So there's 3 demand levels that's got to break through before I hit my stop loss. Right? So as long as it's that the buyers are remaining strong, they keep coming in. Now you got to think of, if this sells off, buyers should step in. Okay, buyers should step in and want to buy it if the institutions are truly trying to accumulate this. Right? Now, if we can project up here and get around that $78 mark or somewhere there, then I'll move the stop loss up under this little demand zone here, 6-minute demand level, right around $68. Okay, and protect some more of that profit. Okay, but this year I'm going to give it some room and let it breathe. Okay, not worry about it, not be concerned about it. Whatever profit comes out of it, be happy with. Right? But that's kind of what we're looking at there. So 4-hour time frame. So this is my trading screen. This is my setup screens we're looking at here. So I got weekly, daily, 4-hour, 60, 15. Is the 4-hour necessary? It's not. Okay, it's not for you guys just yet. And the reason being is the more steps I bring into the system, the more confusing and the longer it takes to come into play. Once you get comfortable, once you get through that multi-time frame analysis, you can look at whatever time frames you really want. And so remember, as I'm teaching you going through a foundations course, I'm saying this is a guide, this is a guide, this is a guide, right? And it's a correct guide, but it's not a hard and fast rule. It's a guide. And it's a guide for you to develop the skill, to have the understanding of what the hell's going on, what's happening, why is it happening, where is it happening, and what should happen next. So it's a guide. So your weekly, daily 60, 15 is a guide. Now remember, 60 and 15 in that process, we're not doing a great deal on, we're trying to refine. Right? Now, as your skill level picks up, we'll start doing a lot more on the 60-minute chart, but I've got you on the daily time frame because the larger the time frame, the greater the probability the trade's working for you. Okay. The next thing we can do is bring that down to a 4-hour or 60-minute time frame, and we'll start to get into great demand zones, and we'll find more transactions on the smaller time frames that align with the daily. Right? We'll get you there, but we're going to do a few. We're going to do several of these sessions here to give you a better insight and better understanding. Okay. Also, in the trading, sometimes we see 10-minute time frames. Okay. So this chart here, my bottom right corner, I'll change this. At the start of the day, it starts on a 30-minute time frame, and it's a kind of a good intraday aspect of it. So right now we traded high, we're basing. Okay, lower volume coming into play on the basing as it should. So this has got the potential of a breakout. It has a great potential of a breakout. Now there's times where I'll bring this down to a 5-minute time frame. And just for 5-minute aspects of it, and kind of looking at the details of what's happening, where is it happening, why is it happening, right? More than anything else. Right? And every time I see this in a 5-minute time frame, I immediately always come back and bring it back to a 15-minute chart, because the smaller time frame can create emotional reactions that you do not want to have happen. Okay, so 15 minutes is really the smallest time frame I want to be looking at for longer term day trades to swing trades setups. Okay, looking at, if I flip over to the other screen here, okay, monitoring the macro market. So Apple, Tesla, Microsoft, Amazon, Facebook, Google. You'll see these on usually 15-minute time frames. You can see right now Tesla's on a 5-minute chart here. I was looking for a day trade entry on Tesla this morning, looking at this little demand area right here, and it didn't hold. Okay, it didn't hold. So I took a $28 loss on that little day trade right there. Okay. As soon as it didn't hold, just boom, exited. Okay. And then it shot straight back up. But Tesla's just done nothing. It hasn't given me any reason to do anything on that small time frame. The reason why it's on a small time frame is looking for a short-term day trade. Okay. But most of the time, these are going to be on 10, 15-minute time frames. Okay. You'll see the macro markets over here, usually on 15 or 30-minute time frames. Okay. So 15, 15, 15, 30-minute on gold right here. And it's just looking at, where are the, there's the S&P in that supply area. Okay. NASDAQ hit supply. We came back to attempt to get back to it, and we couldn't even get up to it right there. Little demand level right there on the NASDAQ. And we seem to be holding demand zones, right? It gives the indication of buyers remaining in control. So these are the little aspects of information that the market's feeding me to make decisions from. Okay. So yeah, you'll see 10-minute time frames, you'll see 15-minute time frames. Which one do I use when? When the picture makes sense on that time frame is when I use it. So when it's a clearer, more defined demand zone or supply zone on a 15-minute chart or 10-minute chart is when I'll switch to which time frame. Okay, and that's all there is to it. Right? There's no special magic or anything else behind it. At this time, Mike, I don't want you to looking at all different time frames. Okay, I want you kind of following the guide, weekly, daily, 60, right, and the kind of the smallest one of 15 at this point, to just take it step by step, right? And it's like there's a huge elephant to eat here. You got to take it bite by bite, and then you'll consume the elephant, and then you'll have this skill set, and you'll be good. If you try and consume too much at once, it creates confusion, and that's dangerous. And I don't want to. I don't want you going there. Okay. The worst thing from a trader perspective is confusion. Here's what I know will do to people. They get confused, they quit. Right? They get confused, they'll trade, they'll lose. Because you can remember the greatest enemy of a trader is emotion. I said that I don't know how many times throughout the course. So I don't want you, going into too many time frames, because looking at different time frames is a very fast way to create confusion when you're new to it. Okay. Once you've gone through that guided process, weekly, daily, 60, 15, a couple hundred times, and you can look at a daily chart and know what the 15-minute chart is going to look like, then it doesn't matter. You can look at whatever time frames you want to look at. Right? Not a problem at all. Whatever time frames you want. Right? Very simple, very easy to do. And the only way you're going to get that understanding is by, like I said, looking at a couple hundred charts and just going through the process and doing the repetition, okay, over and over and over. Okay. And you get there. Put the repetition in, put the time in, right? You get there. It's like going to the gym. Put the repetitions in, right? You get into the condition you're looking to get into. Okay. All right. Let's come back to the SPY. Okay. So we got the breakout. We got the base. Okay. Looking for follow through today on that. That'd be great. Now, like I said, over the last year to 2 years, the markets are moving in the overnight more so than the moving during the day. Right. So if as long as we close above these candles highs right here, then we'll probably see them move up during the night, which means we get a gap up tomorrow, and then we can get a nice run tomorrow if it doesn't gap too far. Right. Right now, buyers are in control, maintaining control, and we're just going to stay with them. There's no need to sell off on anything at this point. We look at the Qs, right, which is the NASDAQ 100. Okay, so weekly time frame, strong moves the other direction. There is a little area of demand here in the weekly chart, which we've tested here and here. It's where we dropped down to last week. Okay, we're at the lower trend line currently. Okay, so we closed pretty much just below it yesterday. We're currently above it right now. We're at the lower trend line. So the tech has got a huge amount of room to run up, massive amount of room to run to the upward direction. Coming to the 4-hour time frame, there is a drop, base, drop. Okay, now here's the power. As you can see right here, we did trade below the lower trend line. okay, and we closed back right at it. So that's the indication of institutional buying right on that trend line, right? And then we can move up to it. We're in supply right now. We're in that 4-hour supply. So we have to expect sideways movement here. We're looking for a couple candles to go sideways, use up the unfilled sellers before going higher. Okay, so what's happening in the market right now is it's as expected, okay, as expected. So, expect the base here, and then for the follow through. And then if we can get tech to run, and we saw the big inflows today, okay, so big inflows coming in. Sorry guys, I'm on the wrong screen for you. Okay, so try to move up, okay, right back down to the lower trend line here. Okay, 4-hour chart, this is the supply zone I was mentioning. This is the long tail down below the lower trend line, close back at the trend line, push up. We're now in that 4-hour supply. Okay, so expectation sideways to break out. Right? And then big tech, if big tech can move, right? And big tech, like I said, we've had a lot of inflow, okay, a lot of inflow in big tech today. So this is what I'm using these charts here for. Okay, so big move to the upward direction, right, on Apple today. So huge inflows into Apple, huge inflows into Amazon. Right now, these two companies are very, very important because these are the two biggest. Okay, so these two stocks moving up, that's going to have a big push behind the S&P and the NASDAQ. It's going to drive them. Right? You can see this was the Microsoft this morning. Okay, we got above this resistance here, used as support. So the new resistance we created here, we can break above that. We can fill the gap, get up into what was support over here. Right, continue that move up. Facebook is a lagger, not doing too much. Did have a nice push this morning, and then we retraced most of that push. There's a little demand zone right in here. Okay, but you can see here it's just stagnating. And then Google had supply here this morning. Okay, when we came up, we hit that big long wick, straight back down, and then boom, exploded straight up to the next area of supply. Okay, right in there. Okay, now we got the retracement back down. Okay, and looking now for the next push up. Okay, so we've got to get all these stocks here to work together, right, to get the NASDAQ through supply. So this is the big text that I'm looking at on a consistent basis to look at how's it going to drive the S&P, how's it going to drive the NASDAQ, right? So to be able to have that information from looking at the micros that create the macro, right? So looking at the small time pictures to make the big picture being the NASDAQ, right? So big inflows into the NASDAQ today. That's going to help the kind of the forecast, if you will, of coming to the upward direction and pushing through and breaking above this. So the NASDAQ's got a lot of room to run. You can see there's a minor trend line coming through here. And we've got to get above that minor trend line. And then if we can, okay, that will become support. And that will then project us up to the upper trend line here, which is, there's a lot of room on big tech to run, a lot of room, okay? So, looking at retracements right now in Tesla, there's a good opportunity as it currently starts to break out, okay? It's better to stay with a few stocks to start with to learn the characteristics. It actually is, okay? So the best ones to start with is not actually individual companies, but it's the SPY, the Qs, DIA, and IWM. Right? So start with the macro charts. Start with the macro markets, because if you start with the macro markets, then and you can get really good at understanding what the macro market's going to do. Then you can take that information and apply it to stocks. Okay, because what drives the stock, 80% of the stock movement is the macro market, it is the indexes, it is the S&P, the NASDAQ, the Dow, right? the Russell 2000. Okay, that's the driving force behind the stock. So if you get really good with the macro market, then coming into individual companies, you'll absolutely rock it. Right? You do really, really well. Looking at the stocks we're looking at, kind of that next generational, future generational stocks are extremely powerful right now. So you can look at the macros, right? S&P, Dow, NASDAQ, Russell, and then also come in and pick just a select few stocks and just kind of focus on those stocks and keep it simple. Right? Keep it simple. Like I said, in foundations, I know traders, they only trade one stock and one stock only. Okay, and that's it. DIA. All right. Now, driving force. Well, not driving force, but powerhouse lately from money flow standpoint is the Russell. Right, Russell is absolutely on fire. So the weekly chart here, in comparison to the weekly chart of the S&P, the Dow, et cetera. Look at the weekly chart; it's just exploding. Okay, and this again is tying back into looking at that future generational companies. Those future generational companies are small cap companies right now. Right? There's going to be a few of those are going to become possibly in the future massive companies. Right? Possibly in the future massive companies. So this is one of the reasons why Russell is exploding right now. Is we are in a new era of technology, and that technology is going to drive like crazy. Right? So looking at battery power, to looking at electric vehicles, looking at solar power, and kind of that what do you call it? Environmental aspect of it, etc. All that's going to come into play. Right? All that's going to come into play, especially with the changing government. They're huge behind that. So that's why Russell's exploding. So we want to take advantage of this. Take advantage of it. Russell's got a little bit of weakness today. Okay, but on the longer term view, we've already got a new all-time high this week. Okay, today we hit that new all-time high, and right up there. We've come up, retraced a little bit. There's a little demand zone here. That's what that tail is a little demand zone. So same thing we looked at very earlier is you get a wick overlapping with the tail. There's going to be demand zone there. Okay, so this is your demand zone here in the 6-minute time frame. When we break it down, so down to that area, up we go, new all-time high. Now we get the base. Okay, so again, we're looking for that base breakout. So pretty much across all markets right now is we're looking for that base breakout. And if we can get that breakout, we can get a substantial move to the upper direction. If not, we'll get a retracement. So then you look at, okay, where can we retrace to? So on the daily time frame, as we come back down to these lows right here, right? 205. So 205 is back down to this demand zone on the 6-minute chart. Okay, and that would be kind of a very shallow retracement. Deeper retracement, you'd be coming back down into this area here, the 197. Right, back to that demand level. So again, just kind of laying these areas out are very, very powerful, very powerful. On the wrong screen for you guys again. I need to be able to see this stuff. Okay, so strong move up in the Russell. Okay, strong move up, base, breakout. Okay, basing again. Down we come. Okay, and then that was the 205 area right here. The domain zone. I think that'd be a shallow retracement of the markets. We'd be down here. And then your deeper retracement would be coming down to this 197 area. Okay. So what you'll find in common here is the gaps. Gap up. This is a gap fill. So you see we post in the trading room all the time. Gap fills, very, very powerful. Right? Fill the gap. Up we go. Okay, this would be a gap fill down to here too. Okay, and you got a base, rally, base, rally. Okay, so there's a couple areas right there. Just looking at the top one initially, that'd be demand level here. So if we get a retracement down to here, that'd be a phenomenal area to get involved in this market. And eventually we will. Right now, we're actually looking for the push north more than the downward move at this time. Okay. Yeah. So stats are, and it's not a hard and fast stat, but do we look for individual stocks to respect the market ETF first? For sure. 80% of the stock move is related to the overall market itself. So if the S&P is going up, 80% of stocks will be going up. Right? So 80% of the move of that, when you break it down, we look at it this way. So we're going to start with kind of this perspective. Looking at it this way, here's your major markets. Right, so this is your futures market: S&P, Nasdaq, right, Dow, Russell. You can see that the Russell is the weakest one today. Nasdaq is the stronger, followed by the S&P, and then the Dow. Right, looking at the volatility index. So this is a great gauge. This morning we had a little bit of selling pressure, but the VIX wasn't moving. So which means the institutions aren't buying puts to protect their portfolios. So if they're not concerned by their actions of buying put options, right, which is insurance, then the follow through on the downside of the market is low. And US dollar has moved up. This chart is important at this point in time. Let's go to the dollar real quick. So being a futures contract, I don't have the continuous contract up, but this is the current, what we call front month contract. You can see obviously downtrend. Okay, we've had some buyers under here. Right here is your weekly supply level. Weekly supply level that we came up and tagged this week. So we break above that supply level, we can get up to the next area here, which is going to put a lot of pressure on the stock market as well as Bitcoin, right, the cryptocurrencies. Right now, I mean, up until 6 months or so ago, the US dollar was the safest, other than gold, the US dollar was the safest place to have money. Right? You can use US dollars anywhere in the world. With cryptocurrencies, that's changing dramatically. And with the printing now of, what are they pushing, $12 trillion of US dollars in the last year, that's now created the the US dollar to not be safe anymore. So you're going to see the continuation of supply of US dollars going to continue to drive the US dollar down, and which is going to internally going to drive other currency values up, just like the Canadian dollar is going up. Right. So looking at this, we have, you can see on the daily chart below the 13 to 20 period moving average, keep using as supply as resistance. We just broke above that. Right? Now this is where we came up. We tagged this supply level here, okay, and this is a weekly as well as a daily supply area. Right? It's proven right here. We tagged that. We got the retracement back to the moving averages and held, and now moving up. So we're going to come back most likely and attack this supply area again. You see the 50 period moving average just above us. That's going to be a resistance area. Now, if we get above that 50 and above this supply, the outlook on the markets, right, the S&P, et cetera, changes. And we're going to have to look at the data at that point in time, because we're in a new era, right, where the US dollar doesn't have the power and the influence over the markets as it once did because it printed so much of it. But we're going to look at the reaction to it. But this is definitely something we got to keep an eye on at this point in time. Right? Seeing the daily strength here, okay, coming down, closing at the 20 period moving average and reversing off. And we break that down in this time frame over the 4 hour time frame. Right? Here is your drop, base, drop. Okay, and we just respected that supply right there. Okay, so respecting supply, that gives the probability, as we drop away from that for the NASDAQ, okay, for the NASDAQ and the S&P, right, but for the NASDAQ to get through this supply level, okay, as well as the S&P to break through this supply and then get into this gap. Okay, so the futures charts I'm using here are only during the day, so only market hours, regular trading hours. So there is trading activity here when we go to a 24-hour chart. Okay, but we just broke through the supply. Okay, that gives us now the opportunity to get all the way up to the supply here. That gives us the opportunity of the breakout that I was mentioning earlier, be coming to fruition and pushing the upward direction. Now, for this to be fully supported, what we need over here on the left is we need Apple breaking above the high here. Okay, we started to get the breakout here on Microsoft. Okay, so it's broken above its resistance, so that's proving what we want. We need Amazon breaking the upward direction, and we're starting to get the breakout here of the little demand on Google, also coming off a support resistance area and continuing through. So we get a continuation of money flowing to this, which we don't have right now. Okay, it's going to make it hard to get a continuation here. Okay, we need big tech to follow through, and right now it's kind of lagging a little bit. Okay, so this is looking at macro markets and understanding, okay, what do I do, when do I do it? Supply being 4-hour supply being respected, pushing back down, okay, is going to give us that indication that the S&P and the NASDAQ can push to the upward direction. Okay, it gives us the probability there. So nice inflow right now. Okay, we're getting above this candle's high on the Russell 2000. Okay, that's going to be good for the smaller cap companies that we're trading pretty heavily in the trading room here. Okay, but we need to close above. We need to close above. We need that push up. So we're starting to get everything that's I'm looking for in the markets and expecting to see in the market. So US dollar is very, very important. The relationship, okay, what we call a correlation from US dollar to stock markets has been changed. So we've got to look at that data and not assume what it's going to be. We have to actually read the data just to kind of find out what it's really going to be. So important one right here on the US dollar there. Okay, let me just come down. Bonds are currently rising. Right, so this is a 10-year Treasury note futures contract. Oil did great this morning. Right, so this is CL is the oil futures contract. So oil gapped down this morning right into the demand level, right? Filled the gap and just couldn't get out to new yearly highs, 52-week highs. Right, retrace right back down into demand. Now, oil market is closing in 20 minutes. Right, 2:30 Eastern it closes. Now the futures market doesn't close, but the actual trade is on the floor of the oil market closes. Right, so we're not going to see that push up this afternoon. If we did, that would add a huge argument to the S&P continuing to the upward direction. Okay, so again, you can see the NASDAQ here starting to reverse off that supply level. Okay, so how hard it reverses is what we need to gauge there. But we're not really seeing the big push we need to see coming into big tech here. So the probability of NASDAQ breaking through without seeing the money coming into big tech is decreasing. You see, this is the breakout on Tesla. Okay, Tesla is going to run right into the close of yesterday, closing price of yesterday, and supply right here. So you're going to see it base here at a minimum, right, at a minimum. Okay. Let's come back here. Okay, so running down the list here, then we got all big tech. Okay, so you can see big tech is all green. ZM's had a big move up, so I posted that transaction as a breakout this morning. Amazon's up almost 2%. That is a big move. Apple's up, just over 1.5%. That's a decent move. And then Netflix is up 3%. I haven't actually looked at that until you guys were doing that in foundations. Not a stock I look at a lot. Okay, Netflix is in a range. Okay, now just looking at two major controlling stocks of the Dow, the IBM and Goldman Sachs. So just a very brief on that. Coronavirus plays, and then looking at the oil markets. Okay, looking at the sectors. So from here up this morning, these are all red. Okay, so you can see now money flowing coming into discretionaries and financials. Coming into financials is huge. Okay, coming to financials is a big deal. Okay. Okay, so important one there. So financials driving up is going to help our case of the continuation of the S&P. Right, so then we can look at the charts on this. Technology was actually the weakest this morning. Okay, sorry, strongest this morning. That's why it's at the bottom. And money flowing into utilities. Okay, that is not a good argument for the continuation of the S&P. Not a good argument. Okay, let's go back to Netflix real quick. Jump back. I'll kind of go through the entire process. So Netflix weekly time frame. Pivot high, pivot low, pivot high, pivot low. So most recent low is higher than the previous. Most recent high is lower than the previous. So we meet the definition of a sideways trend. So uptrend, right? Stage 2, stage 3. Okay, all these big tech companies, we're looking for continuation. So we're looking for the breakout here. So two different ways we can approach this. Right, lower probability way is entering off the bottom of the range here. Okay, entering off the bottom range of the sideways trend. So the way you can do this and still do it in a safe perspective with lower probability is take on a smaller position. Okay, what we need is we need to break above, okay, this trend line. Then you could add to the position, or you wait for the break above the trend line, then take the trade. So Netflix is something we're waiting for a breakout on, okay, on the longer term picture. And you can see it's kind of a very messy sort of chart. There's a nice drop base rally there. Okay, we broke below that yesterday, back down to this area here. And so that's a drop base, okay, rally, base, rally, base, rally. Right, so kind of really messy through here. Right, this here would be the origin of your demand right there. And we didn't quite get down to the origin yesterday. So without getting that low, I would not have entered this trade. Okay, now where we are right now is supply. Right, so you've got the drop, the base, the drop. So we are in daily supply right now. Right, and we're coming into that 13 period moving average that you can see has been used pretty heavily. It's most of the 20 period moving average was up here. Okay, but we're at supply. So you see on the 4 hour time frame, there's your base, there's your drop, sitting in that supply zone. So really before we do anything with Netflix is we're gonna get through the supply. Right, now what's common and expectation is develop a base here to break out of, or tomorrow we gap up into supply, we take the trade on the gap fill. Once we're above the supply, we know buyers are in control. Okay, at this point, we're in a sideways trend, okay, downtrend on the daily time frame. We get above this high here, we're gonna have a higher high. Okay, that's the start of the uptrend. So then we look for a buying area. So if we can get the gap up tomorrow, gap fill, there's a trade setup. Okay, you come down the 6-minute time frame. Here you've got a nice strong rally, base is forming. Okay, and then we'd be looking for that breakout today or the gap tomorrow, right? And then wait for the gap fill tomorrow. Okay, so that'll be kind of the expectation, what we're looking for on Netflix. So big money coming in today, a big move up today. So the buyers are interested. They just have to prove themselves. They got to get through supply to prove themselves and for the buyer to be in control. Okay, and then we can look at what happens next. Okay. All right, guys, so that's just a quick little overview. Constantly learning on the approach of how to do this most beneficial for you guys. So that just kind of takes us through a quick overview of what we're looking at in the markets, why we're looking at it, kind of the macro view of a live market to be able to guide and control decisions. So not emotion, but looking at data to drive decisions. And then kind of a quick review of looking at the multi-time frame analysis. So like I said, we'll continue to do this every week, and we'll do at least an hour session and just keep that repetition coming into play. Now, what I need from you guys is coming in. Now, you don't start with so if you look at this screen here, Mike, that's the order in which you want to go. Right? Start with the indexes first. Okay, kind of have the understanding of what's going to happen there, and then come down and look at the other aspects of it. Okay, so what I need from you guys is repetition, going through, setting trades up, right? Putting in demand zones, scoring out those zones, just like you're doing in the Foundations course, and posting those in either the Foundation Education Room, or better would be posting right into the Trading with the Pros room, right? And let's use a community here to kind of guide and help and help each other to get you guys up to speed and posting some really good transactions and more eyes on the market and more opportunities out there, right? And bring that all into play. Okay, that'll be awesome. Okay, quick little overview for you. I'll probably just post this directly in the Foundations recording area at this point. And I'll find a way to kind of do that effectively. All right. Have a great afternoon, guys. Safe trading. Get some green on the screens. We'll see you later.